Welcome back to the channel. I'm on a mission to increase my income with options trading on my dividend stocks. I've never seen anyone try and do this. People I'm sure have, but this is the way I'm going to try and do it using the wheel strategy. So this video is going to be a breakdown of my first 6-ish weeks of trading, how it's been going, my profits on each one, my loss on each one, what other contracts I have out currently. Basically a rundown. If you haven't seen the first part of this video, I will link it in the description down below. You can check it out. It gives more of a idea of what I'm doing with this, and that'll give you more of a background. But if you're not interested, that's fine too. Just check this one out. Let's see how we're doing. So the wheel strategy is the use of puts and calls operating in a wheel. You buy puts over and over again until they are exercised, and then you write calls on the 100 shares of stock that you have purchased. If that doesn't make sense, I'm sorry. I'm not the best at explaining options. I'm still learning them myself for sure. But I hope that that does give you some idea of how the wheel strategy works. Basically, every time you exercise, you just switch to the other type of option contract. So the one thing I do want to point out is that these are all cash secured puts. I'm not buying puts that I can't afford or that I don't have the cash reserves for. That is important to note because I don't want to make a bunch of investments without money that I actually have in case they go down. So this is about the third time I've tried to film this video. I just hated how it was, so I'm doing it differently this time. We're going to try and do it all in one shot, so I'm not going to edit it a bunch. Let me know if you guys like that or don't like that in the comments, and let's just jump straight into it. So the first option that I wrote is on Ford. Now this was a put, and I believe I did it for April, or I purchased it April 1. And this one actually is the only loser in the account. So I bought this April 1 Ford put at $13. So April 1, it was on an uptrend for sure. I mean, up to that point, we were up 35%. So I kind of figured, oh, it'll continue to uptrend a little bit, and it did not. So from the $13.30, I bought a $13 put. It dropped all the way to $12 immediately, crushing my returns. It was down 9%. And from that point now, it's only up 75%. So I was exercised on this call, but the premium was $44.32, obviously, because it was a very risky option. Now, in my 6 weeks of options trading now, I have learned quite a bit, and I probably wouldn't do this one again, but I do think that it was a really good learning option. So the problem with this one, what I ran into is Ford just was below. I expected them to have good earnings, and they didn't. That was one of the main issues, and that's why the premium is so large. For those of you that don't know, the premium is what you get for purchasing a contract, and it immediately goes into your account, which I love. So I immediately got $44. Now, my profit loss and total return. My profit loss was $57, and my total return is $53 because my loss, I purchased... Let me see exactly what the price was when I was assigned the Ford puts. It doesn't say, but I was assigned them on May 3. So if we jump to the 1 month and we go to May 3, at $12.43 a share. And so I lost $57 off the rip. That's what the profit loss stands for. And then my total return is what I'm at right now because Ford came up a little bit and now I own 100 shares, but it is still down. So I've lost $53 and that's with the premium included. I would be down 90 something dollars, but that was my only loss. So I'm pumped about that. Now what we're into next, MPW. This is a call. Now I don't recommend any investing, but I really don't recommend options trading on a stock like MPW that's so volatile. Now I own this one and I'm probably going to get one contract sold that's going to be ending on the 10th, which is tomorrow. I have 2 contracts out for MPW right now. This first one expired worthless, meaning I kept my $8.50 premium and my total return was $8.52. That was great. It was for a couple weeks, a call on MPW. And this one was a $5 call on April 2nd. So if we go to April 2nd, we can see it was trading for $4.31. I think a $5 call is relatively out of reach at this point. It had just come down from the $4.70, so the premiums were still pretty good. And it did trend up. It's up 8%, but it expired on the close date of April 19. This was a much shorter contract. It did get close. Oh my gosh, I remember at the $5, it was actually at like 5.17 after hours, and then it dropped the next day. So this one was really risky. That's why the premium was $8.52 on a $400 investment, $500 investment. Actually $400 because I bought it when it was lower. So all in all, that was a pretty successful one. MPW is risky. I'm only doing it because it's the only one in my Roth IRA, the only stock I have that's so cheap to write options on, and there's a lot of volume. So I'll probably continue to do so, but it definitely is riskier. Now next, we have AT&T. And so this was a very interesting one. This one was exercised as well, but I'm positive. And I'll explain how that works. So my AT&T call was for April 26 at $17. And I bought this on April 8th. So we go to April 8th. It was trading. You can see I bought these at the worst times. So 17.25, I go, oh, you know what? It's been trading above 17 for about a month with a couple low points, but it keeps bouncing in the last month. I think it'll do okay. So I buy a $17 call or put. This is a cash secured put. I added the money for this. And it immediately drops almost 7%, going $1 below. Now, this is where it gets interesting. So on the 24th, my call is exercised, and I buy it at $16.81, or it gets exercised when the price is $16.81. So I lose 19 cents. I lose $20 immediately because I purchased it for 17. Now, the beauty of this kind of wheel strategy is that I can immediately start writing calls on AT&T and Ford, and AT&T bounced. So now the reason I'm so green is because I made $36 on the premium. I lost $19, but between the premium and my total return, I'm actually up about $60. And so I was up total of 80 had I just purchased it at that point, but that's all right. My cat's going to join me. My cat's going to join me. So, no, he's not. Ready? Isn't he beautiful? He's beautiful. But anyways, so I was positive on this trade, and I was really happy with it because this shows the beauty of the real strategy. So you own these stocks. If you think that these are going to go up in the long run, you may get a contract called. You may get it exercised, and you purchase these shares. But if you like the stock anyway, now you just own a stock that you like. And I think AT&T and Ford are going to continue to trend upward. So I'm fine writing contracts on these. He's going to drive me crazy. So much for no editing. My cat, I swear. But anyway, so the AT&T trade was a good one. I am up. I still hold T, and now I'm writing contracts against it. I already wrote a contract, but we'll talk about that. Now, the two MPW trades I have out right now are two calls. So I have 200 shares, and I have a 450 call that's pending. So this one expires tomorrow, and a $5 call that's pending also expires tomorrow. MPW, I was pumped because it dropped like crazy yesterday, 2 days ago, and now it's up 5% today. So I was in the green. This thing was trading below 450. It was like 435, and then it bounced up today. I'm hoping tomorrow closes red because Fridays typically close red for a lot of stocks. But really, I'm just hoping I don't get both exercised because I'd like to keep some of my MPW shares. I have already made a nice profit on these, so either way, if they get called out, that's all right. I can start writing more puts on them. But still, I'd like to hold these because my dollar cost average is in the threes. But that's the beauty of the wheel strategy. So between these two, I mean, you're talking about, what, $36? $36 I made for a couple, it was like 2 weeks I held these. So the way options work, if you're new to options, your time in the market, the more time you have in an option contract, like a week versus a month, you're going to have lower premiums for a week because there's less that can go wrong and less that can go right, depending on what your contract is. So if I own T for a week, a T call, it was $5. Whereas a T call, if I go a month out, is like $40. And so it all depends on what's going on. If there are, let's say, earnings or something, then your premiums are going to be more because there's higher risk, higher volatility. But that's kind of how it works. So I've been writing some shorter calls, especially with T, because I'm not sure where it's going to go from here, if it's going to continue to downtrend. And if the whole market does too, then I'll just be sitting pretty writing calls, and that's okay. So the MPW ones, we'll see in my next part in this series. I'll explain what happened with these and if they were successful or not. But moving back to T, I wrote a call. This one already expired. I made $5 in a week. And this one was really, really interesting because I was like, shoot, I can actually make money relatively quickly and relatively risk-free, or at least very risk-averse to what I'm okay with risking. So I had a 17.5 call. I bought it April 29, and I sold it for May 3. So if we go April 29, it's 17. I say it's 17.50. I'll sell my 100 shares. And at May 3, it expired less than 17. So I collected that $5 and I can do that again, roll it over. And so that was like what, 5-6 days? And I'm happy about that. So recently this week, I wrote 2 more calls on it. So I have a T call at 18 because AT&T trended back up a little bit. And I have a Ford call at 13. And now Ford is at 12. So I could have even gone 12.50 and been a little bit less risk or a little bit riskier. But the premium was about $6 versus $4. And so I didn't see it being worth going extra. So I'm going to continue to write these calls over and over and over again. It's a lot of work, but I do think it's kind of fun. And so let's talk about total. My premiums collected total is $139, and my total return so far is $144.44. So a good way to calculate if this is working, or my percentage of return. So we have 6 weeks, and in 6 weeks, let's rule out the more recent ones, or we'll just talk about. Let's talk about AT&T, just the premiums on AT&T. So this was about a month trade. So I was betting AT&T is more expensive. It's about $17, and I bet $17 because I said I'd buy it at $17. So we're going to take our premium, which is $36.32, and there's a couple fees, so that's why they're all non-whole numbers. And we're going to divide that by 1,700. And you can do this with anything. So, oh, wow, 0.02%, very low. Yes, multiply that by 100 for your percentage. So my percent return is 2% on just the money invested. Let's be clear. It's on just the money invested. This is not my account as a whole. So you have to understand that you are going to be risking whatever money you put into just the options. This is not just a whole options account. This is my retirement account, my Roth account. So I have other stocks in there that I'm just holding. I have some that are dividends, some that are not. But the beauty of this is, so this took a month. So if I do this every month, we'll multiply that percentage by 12 or by 2.1364 times 12. 25.5%. So I can get a 25.5% return if I can continue this. And that was just on the premium. It's not what I've made with the bonus of AT&T stock going back up after. And that's how I calculate these, especially we'll do MPW as well. So you can see your return on your money. So MPW, a call, again, mine was at 4, which is why it's easier for me to risk. But let's say I do if I do MPW, it's $5 a share. So it's going to be $500. And I made 13.32, relatively zero risk. Why can I not click this? And so we're going to divide this by 500. This one's going to be more. And we're going to multiply this by 100 for our percentage, 2.6%. Now this one took 2 weeks. So I'm going to multiply this by 24 because we're going to double it. You do it twice a month, 12 months, 24. And so I can relatively low risk, and it's not low risk because it's MPW, it's a higher risk stock. I can return, if I keep this rate up, I can get 64% just on my options. Now this is not including when it's going to expire. This is just off of the premiums. And so I'm happy with that. I think everyone would be happy with 64%. And now this might just be like a fluff week where everything went well and in my favor. And I'm sure I'll have weeks where I lose more. But all in all, this strategy worked really well the first month. Now, it's not a get-rich-quick strategy. I made $144, and my total investment was, $4,000. A little over $4,000, actually, with these cheaper calls. But roughly $4,000, I made $144 in a month. So if you want to keep recycling this, now I'm going to throw this 144, I'm going to throw that into more options. So if I can continue this and make 144 for the next 2 months, all of a sudden now I can buy another 100 shares of MPW and write options on it, or do some puts and wait for them to get exercised and then write calls on it. So there's a lot that you can do with options, and that's why I've really been enjoying this. It gets me more interested in the market, and I'm checking daily. I'm checking what Ford's doing, what T is doing, what NPW is doing. I have a full not Spotify. I was going to say playlist. I have a full watch list of just my stocks for options, and it's super fun. So I am really enjoying this. Again, I'm up 144 so far. I will update you in another month to a couple weeks when I've gone through some more options and we've seen some better or worse results. But until then, let me know what you guys think. Again, I'm new to options. I've been doing this for 6 weeks only, so any criticism is welcome. I'd love to know what you guys think and what you guys do, and if you use the wheel strategy, and if you don't, why. But let me know if it's worked for you, and subscribe if you're interested in this type of content. I don't put out a ton of videos, but I appreciate you guys for watching, and I'll see you guys in the next update. Bye-bye.